If you're thinking about buying a home, but your income or your credit is not quite where it needs to be, adding a cosigner might be the right solution. I've been a mortgage loan officer for over 13 years, and I've helped hundreds of people purchase a home using a cosigner. Let's talk about what a cosigner actually does, who qualifies, and what risks are involved. A cosigner is someone who's going to take equal financial responsibility to repay the loan and will be responsible for making payments if you're not able to. So in order for a lender to add a cosigner, they would just take a regular application, same exact way that they would take from you. They would get all their income, asset, and credit information, and then they can combine all of that with your scenario and figure out what you guys qualify for together. It's most common that a cosigner is going to be a family member, usually like a parent or sibling, but you can also have a friend cosign in most scenarios. The absolute most common reason that you would add a cosigner is if your income is not enough for you to qualify for the home loan. So when a lender reviews your application, they have to calculate what's called a debt to income ratio. This is the relationship between your monthly income and your monthly debt payments. So your monthly debt payments are things like what the housing payment is going to be on the home you'd like to purchase, plus like if you have a car payment, maybe you have some student loan payments, maybe some credit card payments. So we will look at those payments in relationship to your monthly income, and we calculate that ratio. Now, if that ratio is typically higher than 43, sometimes as high as 50%, that ratio is going to be too high for you to qualify on your own. So there could be multiple scenarios for why your debt to income ratio is too high. Maybe simply put, your income is just not high enough. Maybe you're starting out in a new career or something like that. Maybe you don't have any debt, but just with zero debt, the income is not enough to support that mortgage payment and the debt to income ratio is too high that way. Or maybe you do make a lot of income, you can show a lot of monthly income, but maybe for whatever reason you do have some debt. Maybe you have a car payment, you have student loans, maybe you have personal loans, credit cards, that sort of thing. And that would be another reason why your debt to income ratio would be too high. Now, in some cases, maybe your credit is not good enough for you to qualify. And sometimes a cosigner can help with that issue. It's less common. The main issue usually is the debt to income ratio. Simply adding just any cosigner is not always going to help you qualify. It's about finding the right cosigner. A short way to sum it up is a good cosigner is someone who has decent credit, decent monthly income, and relatively low debt. Because typically the ability for a cosigner to help you qualify is only as good as their debt to income ratio. So let's say you added your dad as a cosigner. Maybe he's owned his home a long time. He has a relatively low mortgage payment. He's been paying his balance down. He has a low rate. The payment's low. He's been at his job a long time. He makes really good income, and he doesn't really have any other debt. He's paid off his car. He doesn't have any credit card balances or anything. That would be a good cosigner because his debt to income ratio is low. But let's say maybe you looked at adding your sister, and maybe she just bought a house a couple years ago. Maybe she has her car payment and her husband's car payment in her name. Maybe she's got some student loans and some credit cards to pay off. Her debt to income ratio may not be as low, and so that might not always be a good cosigner. Now, you wouldn't make the assumption that someone that has, that scenario would be a bad cosigner, but those are some of the signs that someone might not be the best cosigner. The main goal of the cosigner is to dilute that debt to income ratio. So a lender would take an application from you, they would take an application from your cosigner, they would combine all your income and all your debts as one single file, and they would determine what that debt to income ratio is. So the lower that debt to income ratio is of your cosigner, the lower it's going to bring that average debt to income ratio between you and them. Now, in almost all home loan programs, the qualifying credit score is only as good as the lowest credit score out of all the buyers. So like, let's say you are applying and your dad is applying and you have a 780 credit score, but your dad's got a 680 credit score. The qualifying credit score would be his, the 680. Typically speaking, you usually have to qualify with somewhere around 640, sometimes less, sometimes 620, 600. When you get below that, it gets a little bit tough. But regardless of what that cosigner's debt to income ratio is, they still have to meet those credit requirements. So maybe they have a really low debt to income ratio, but unfortunately their credit score is really bad. That probably wouldn't be a cosigner that would work for you. The risks involved are really not going to be to you. It's going to be to your cosigner. So basically, if you make late payments, then that's going to negatively affect their score. Anytime you make a payment that's more than 30 days late, or if you just stop paying the loan altogether and you go into foreclosure, that would obviously have a very serious negative impact on their credit. The most common concern that cosigners will have is now their debt to income ratio is going to be higher, because let's say they want to go buy their own home after they cosign for you. The lender will most likely have to account for that monthly payment of your mortgage within their debt to income ratio, and that's going to drastically reduce the amount that they qualify for, or in some cases, it can prevent them from qualifying to buy a home altogether. Now, there is good news to this aspect. Many loan programs will allow your mortgage payment to be disregarded from your cosigner's debt to income ratios when they go to try to buy their home. Now, in order for this to be the case, they have to show proof that you made the mortgage payment directly out of your own bank account that they're not on for 12 consecutive months. And there has to be a paper trail. So typically, if you make the payment electronically online, you would get the last 12 months bank statement showing proof that those funds came out. Or if you write a check for your mortgage payment every month, you can show the last 12 months of canceled checks. But where cosigners will run into problems here is maybe 6 months ago, you made a payment as cash to the bank. Maybe for whatever reason, you had some cash on hand and you figured, oh, I'm going to apply this to my mortgage. So you went to the bank and you paid cash for the mortgage. That's not a valid paper trail to show proof that your cosigner didn't make that payment. So that would disqualify the ability for the cosigner to disregard your mortgage payment when qualifying for their own home loan. Now, of course, to be honest, it's usually a hassle for someone to have to cosign for you. They're not overly thrilled in most cases. Sometimes if it's like your parent, they really want to see you get the home and they're more than happy to cosign. They'll do whatever you need. But like sometimes if you have to ask for a sibling to cosign for you, they're not overly thrilled and they don't want it to be a forever thing. So there are scenarios where you can eventually remove them. Ultimately, you will have to refinance the home loan into just your name, meaning you basically pay that loan off and replace it with a brand new loan, but you have to qualify for that new loan. Maybe you recently got married and now you're looking to add your spouse to the loan, and that would allow you to refinance and remove your cosigner. Or maybe your income and your debt really hasn't changed, but rates have come down enough to where the new mortgage payment would be lower, ultimately lowering that debt to income ratio and allowing you to now qualify on your own. Now, if you want to see if a cosigner will help you qualify for a home loan, the best thing you can do is get with a lender, have them take an application from each of you, and they can lay out all the figures for you. I would be more than happy to help you with that process, and I encourage you to reach out to me so I can help you determine your options.